All right. Well, welcome back to Two Stupid Gas Trade Stocks. I'm Vinny.
I'm Dylan. Today we're going to do another look at some swing picks that might sit up this coming week.
All right. So if you guys are interested in kind of joining us along our way in self-directed investing and enjoying some entertaining stock market content along the way, please consider giving us a like and subscribe below. With that, we'll get to it.
Two Stupid Guys Trade Stocks.
Gotta love it. All right. Bank sector looking juicy to you. I'm happy to hear that, as Bank of America has been not doing so hot for me lately.
Me too. Yeah, we're both getting screwed on that. But I think we'll get into it. But they all fell too much.
All right. Well, this channel is called Two Stupid Gas Trade Stocks. So if you follow us into any of these trades, you do so at your own risk. There is definitely a risk of losing money in any and all trades, regardless of what some people may tell you. But it's not gambling, but it's calculated risk. Dylan likes to break down his trades into 3 different risk tiers as far as how likely he thinks they are set up and what the risk reward ratio is like. We'll link the video above on Dylan's how to swing trade video. It helps explain his ground rules for when he doesn't enter a trade. It's important to know before you move forward with any of the trades there. All right, recap, huh? There's a lot of green column here.
Yeah, actually we run out of room. WWE did not set up. So it went into the didn't set up. I didn't take it. It broke the original rule where I said if it sets a new low on Monday, don't take it. And I think it was Monday or Tuesday. TAP still kind of setting up. I did enter AKAM. That's the one that we talked about last week. It's sitting right above kind of, it's just chilling there. It's not really moving. So that is last week. I had exited a lot of positions the week before, so a lot of my long positions are gone.
Yeah,
green.
Levered.
Ooh,
nothing in the low to medium risk territory this week, huh?
Not in this market. This market's crazy.
Yeah,
everything's scary. So,
no, I feel you, my man. It's interesting times, especially earnings season.
Yeah. It really ruined a lot of my choices because I had a list down to like 10 really good ones and I had to throw 7 of them out. Ooh. So because of earnings.
Yeah.
So
okay.
I mean, Bank of America, Schwab, Citi, they all had earnings last week. They all kind of fell, in my opinion, too much for what the earnings, which that happens all the time. The charts, I still think Bank of America is the most attractive to me. Citi, I'm very frustrated with because they don't ever do what you think they will.
I was a Citi shareholder for I would say like 4 years, and I finally closed that position because like that's just what they do. At Citigroup, it just leaves you frustrated.
Doesn't make any sense. So this was a huge volume day. Okay, we put in a nice hammer, and then over the next 2 days, following all of the bank earnings, because they all kind of reported last week, we had this big guy, but it didn't really put the volume that I would have expected for that bad of a bar. So I'm thinking we're about to rebound. All the graphs look fairly similar. Like they're all down from the top. BAC is down a little bit more. Citi is down a lot, and they're approaching the 200 SMA. If this was closer, I would think that this is the best one, but it's a little bit far.
Yeah. Yeah, I mean, a lot of that's really the macro stuff about the kind of long-term yield curve kind of contracting a little bit. So, it makes sense that they're all going to be trading somewhat similarly in line there.
Yeah, they're pretty close. I didn't really like Wells Fargo, so I didn't put that one in there.
Gotta love it. Activision. This was one you said you entered last week, right?
No.
Akamai. Sorry.
Akamai, yeah.
This is the company I was confusing them with.
Yes, it was, actually. That is true. They have earnings on August 3rd, so be careful. I wouldn't necessarily hold them through earnings. This may be a very short play, maybe more better for like an option play. But they're sitting right above the 200 SMA. They're right at it right now. If you want to go to a chart, we've been hovering back and forth. Boom, 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 right above this kind of level here. And the 200 SMA is slowly creeping up, and now it's about to meet the price. Usually when that happens, we get a push up. So that is what we're looking at. But once again, August 3rd, be careful.
Yeah. Especially if you use an options play too, you have to remember that the implied volatility is going to contract. So you get what's called IV crush, meaning that although you may be correct about the bullish play on Activision, the decrease in that implied volatility after earnings may result in the option being basically break even.
Yeah, it's very close.
Yeah, so you can be careful with that. All right, Boeing. Yeah.
You want to talk about Boeing?
Yeah, Boeing was one of my largest holdings headed into the COVID-19 pandemic. So, yeah, I rode that baby into the ground.
Yeah, it did. Them, American Airlines, Southwest, Carnival, all the whole travel sector. And it's weird because BA isn't really so much. It's like sort of a travel sector, not necessarily. They have earnings in 9 days. Okay. Usually I would not put this in here. That's why it's in the high risk category. However, it's a giant company that's meeting the 200 SMA. It's huge. They have a crazy moat. And if you want to go to the chart, I'm going to show you something.
Yeah, by moat you mean duopoly, meaning there's only 2 companies in the world that sell commercial passenger airplanes, basically.
Exactly. Yes.
Yeah.
Let me remove all these. This line is called VPOC. Okay. This is where the majority. Let me scroll out right here. This is where the majority during the last year of volume has been distributed. Okay, we're under that, and usually that makes sense if we were. This is all COVID nightmare, but we're under that right now, and the 200 SMA is once again doing that push up. I was talking for Activision. I would expect more volume when it's dropping this terribly. It didn't have the volume, so I'm thinking that we're going to get a push up. But once again, because of this market, I'm not taking this unless it sets a new high, right? Usually, maybe 6 months ago, I would just take it anticipating a bounce off of this 200 SMA. But now I want to see it breach 224 before I touch this, because this could just keep falling. I'm not,
Yeah, I got you noted. So you're waiting for confirmation of like a reversal before you would initiate a position here.
Yeah, and it's not necessarily confirmation of a full reversal because it's only one candle. That happens all the time over here. But it just makes it feel a little bit better.
Gotcha.
Because 200 SMA is a big, powerful level. So
that is very true. They make big, powerful planes too.
They do make big, powerful. TLT. We talked about this for a little bit. This is actually one of Michael Burry's plays. We did a whole separate video on it. I am entering this guy now because I think it's at a really, really good price. I think I entered on like Wednesday, maybe. And it hasn't really moved since then. But I'm going to zoom out so we can get the full picture. This is a long swing play. This is not a short-term swing play. This is not a week or two. This is like probably a year.
Okay.
So basically what we're doing is we're buying a put. And I'm going to go to the weekly chart. Okay, so this nightmare is COVID. Do you want to go over what TLT is, man?
So TLT it's a long-term treasury ETF. So you're looking at kind of treasuries being bought by the Federal Reserve, $80 billion a month. So this whole bet basically is on Treasury eventually decreasing the $80 billion per month purchase. I'm sorry, the Federal Reserve decreasing the $80 billion per month purchase of treasuries, therefore allowing treasury bonds to free float back to a market equilibrium.
Got it. Perfect. So basically during COVID, they made borrowing money very, very cheap. Hence, there's like no interest. So it's way, way up here. But usually you could see it usually hangs out in the 130 range, 120 range for like the last 3-4 years. We had a big dip going down here as we were approaching those levels. I think the treasury yield hit 1.6 then. We're then pulling back a little bit. This, you have to take all these moving averages with a grain of salt. It's not really, it's not like a stock. It's very different. So I know people are going to say, hey, but you're going into the 200 SMA because you're buying a put. This doesn't really matter. It's not the same thing. So basically here you can zoom out if you want. We're trying to essentially buy a put My strike price was in the 130 range because logically the treasury yield has to increase over time.
At some point.
Or at some point. Hence
Probably.
why I plan on being this for 2 years. However, I'm not going crazy, risk here.
Yeah.
I think I bought like 3 of them. It's like
Okay.
$2,000.
Okay.
If it hits 50%, I'm selling 2 of them. I'm holding on to 1. That's all I'm doing. So
Nice. Yeah, I mean, long term too, you don't have to worry about data decay eating away your position that rapidly either, which is nice.
yeah, that should be okay.
All right. A couple other sectors over here. Carnival Cruise Line, huh?
Yeah, they lost 33% of the market cap in like the last 2 weeks.
Yeah.
So they're getting murdered right now. All the cruises are. So I would really like to see it drop a little bit more. And then I thought that they were overvalued at like 25.
Yeah. Now
they're 20. If I can get 15, would you go in them for 15, Vinny?
Ooh, it's funny. I was thinking about that day. Carnival Cruise Line was one of our first individual stock videos on this channel. We may have to revisit them. Yeah. I mean, we did it like our first month, maybe.
Okay. Yeah, it's because I had an inappropriate amount of shares.
Yeah. I mean, I did at one point too. I think I had 1,300 shares of Carnival. The day that the COVID-19 first vaccination, third phase trial results came out. I mean, I think I was up like $8,000 in my Carnival shares that day.
Yeah. No, that was great.
Yeah.
I really wanted to hit the 18 range. That's a good buy for me. I think that's a solid buy for Carnival over time. And then the Senate stuff. So.
Yeah, exactly. A lot of the infrastructure, what are they talking? $3.5 trillion now? Absolutely crazy.
Hopefully we get some news. If we get some news, those 3 stocks are going to shoot up. I mean, a lot of stocks are going to shoot up, but definitely those 3.
Yeah, good play. I joined you in X now, so now I'm doing the poor man's covered call on U.S. Steel. So we'll see.
All right. That and BAC are killing our STEM accounts.
I know. Well, BAC for me, man, that's been the absolute worst. I think the vast majority of my other positions have been like flat to maybe slightly positive, but the BAC position is definitely, I think that's almost the entirety of my loss.
Oh, jeez. Oh, I exited Airbnb. I forgot. After your analysis video, I ended my call and in my STEM account. I just took the loss.
Yeah.
So I'm out.
Yeah, I mean, it's come down a little bit more since then, so I don't know. Hopefully I saved you a little bit of money.
Well, in the STEM account, I was at 1,800, and that brought me down to 12.
Yeah,
it was a rough loss.
Yeah, well, I'm saying hopefully you would have lost even more if you hadn't got out of that position.
Oh, I would have lost more.
But good.
A lot. Yeah.
See, helping Dylan was maybe win.
Yeah, good call.
All right, guys, we'll catch you on the next one.
Later.